Alright, boys. Yeah, Potter's on my case, huh? Potter, be nice, mate. Be nice. Um, but it's true, last 5 trades before this ASX trades all got stopped out, and a lot of the profits from May have been given back in June so far. And this sort of streakiness is relatively common in my trading. I'm not sure about how you guys go. Either really good or really bad. So really on or really off in terms of with the market. And a lot of the trading was the US dollar weakness before the Fed caught me a little off guard, and then obviously the US dollar strength in the last 3 days has been a bit aggressive as well in the reversal. And I haven't caught any of that. If anything, I got on the wrong side of that. And that's, I mean, look, it's pretty common. If you're wrong about one, you're wrong about the next one, about the next one, about the next one. When you're right, I think it was May was something like 12 out of 13 trades correct. And then June is something like, I don't know, 6 out of 8 trades wrong. So I'm trading less, and that's, it's something I do as well when I'm not picking the market right, is trade less. The next thing you do if you continue to lose is trade smaller. That's another thing you have to go through, because you're not sure how long this sort of rough patch is going to last as a trader. And the opposite of that is true. When you're making money, you increase your size after a little bit until that ends. Now, most of the money we made in May was getting long euro early, staying long, adding to longs, and euro yen. That was the big trades. And we haven't seen those big trendy markets so far in May too much. And a couple of those trades, like the short Aussie, that reversal in the Aussie was brutal. The reversal in the Kiwi was pretty brutal. So unless you're on board with that reversal in the Canadian dollar, oh my God, it just destroyed the market to the downside. If you were a dip buyer, you haven't had too good a time here since the change in tone with all the commodity currencies. So yeah, I mean, this is going to happen, right? You can't be right all the time. You can't be wrong all the time usually either. It's and the streakiness in my trading is definitely part of something I've grown to be a part of. But the last trade worked, so hey, let's keep optimism going. So the ASX was sold pretty aggressively today, and that was on the back of the banks and the Moody's downgrade yesterday. So sold pretty heavily today on the back of the Moody's downgrade from yesterday. So we do have that short Aussie dollar ASX going on at the moment, and we'll be targeting holding this to see if we can get a little bit extra. In terms of the downside now, the targets are initially the previous low, and then potentially a little bit lower than that. I have to go back in time a little to see where we're targeting here. So yeah, hopefully this one does turn out okay. There is a temptation in your brain when you are not doing well to take your profits early, but that sort of defeats the purpose of having tight stops and take profits. One of these trades working out will cover all the losses from the month so far. So I'm a bit more inclined to let a trade run, try and end the month flat and catch that. In terms of the US dollar strength and the momentum behind it, I don't know. The euro is not behaving as weak as, say, the dollar yen is bullish. So in terms of whether this 3-day rally is it and whether we're going to settle down a little bit, that argument makes sense to me. But it's, easily can continue higher given that we're only mid-range still in dollar yen. 113 is where you really need to settle down as a buyer. But if we've got to get past this 112 resistance zone still, so that's not nothing. And Fed speak has had the effect of helping, right, for a couple of days now. So you're going to have to rely on more and more of the same sort of potential hawkish Fed members to support this dollar, where on the other side of the equation, some of the Fed members are actually dovish, right? So when they speak, the market might get a little bit more timid and start profit taking on dollar. Yeah. And that's part of it. That's part of. Jeez, I'm sorry, mate. You just distracted me. Some of these some of these comments. How are we going with the DAX? Jesus, I haven't traded DAX for a while. DAX is ridiculously high, though. In terms of, you're talking about things which have entered into nearly outrageous sort of stretched market here. This is getting really, really quite high, dangerously high. Same with the US stocks. Rare do you get this many days in a row up. I think we're heading something like near a record here. It doesn't have too many more. I mean, look, you got a couple of red days here, but if you take them out, this before we've had a substantial pullback, we've really seen some stretch moves here. Yeah, so this is the concern, right? The market's going to have a pullback at some point on anything almost, right? Any sort of excuse, the market will have a pullback. That's another reason to be a little bit cautious on dollar yen, because it does still have a relationship with stocks. If stocks fall, then dollar yen will go down because the yen is a safe haven. Not so much reacting to the top side here with US stocks, but the alternative is definitely true, right? Stocks fall, dollar yen will go down, and won't ignore that. And so, Trump has been out of the headlines for a while. He could come back in a big way. Some of the investigations are still progressing on that front, but that does seem to have taken the back seat, hasn't it, for the last 3 weeks? Before I went to Fiji, which Potter believes is my downfall, having a week off the market, that was the sell-off. That was the Thursday and the Friday reversal. And that was some big moves, and the market was pretty sketchy after that, but they did recover quite nicely, and now we've really pushed off and blown off the top, almost to the top side. I think it's sort of madness if you kept on buying up here. It's you basically think that there's going to be no headlines that cause volatility if you're buying this high, and the VIX is just ridiculously low, suggesting there's no volatility coming. And I don't know, obviously that's not going to be the case. We just got to pick your timing right. What could be the catalyst for that? Well, it's not the ECB tapering early, is it? It's not the so far hasn't been the Fed talking about balance sheet reduction, hasn't done anything too aggressive. Japan's not doing anything anytime soon. So yeah, I mean, it is hard to see. And China seems to be not causing any sort of major concerns either. So there, I mean, look, we're in a sweet spot right now. Probably political issues would be the next thing, either Italian or German politics, which are coming up in a couple of months, or Trump. Trump is obviously always his own source of volatility. But Trump's settled down a little bit. If you looking at his Twitter, I mean, maybe we've got Trump fatigue, right? We just don't care what he says anymore. He's definitely a little bit more controlled and a bit more tempered in what he's saying on Twitter as well. So to me, he's not getting as much hot water, and all the people who are detractors are just running out of energy, I think, or just no one's shocked anymore. So yes, expect more of the upside until we get reasons for the downside. But it's the longer the rubber band stretches in these rallies in the stocks, the more concerning. I think we're going to be sitting here in 3 months' time saying, wow, who saw that sell-off coming? Because that was a doozy. That's really, I suspect at some point this year we're going to have a 2,000 or 3,000 point sell-off in the Dow. And that's really, I think, what you should also be remembering is part of the game. This sort of relentless rally since Trump's got in doesn't come without any sort of payback later. Oh, I mean, obviously he might get his tax plan passed, right? Then we're off to another 10% higher. He might get his infrastructure plan passed. Then we've got another reason to be bullish. But if that gets derailed, I mean, you can imagine that could be a catalyst as well. If there's just no way he gets his tax plan passed, because it's pretty radical. It's pretty radical in terms of the cuts. Then you'd expect some volatility to creep back in. All right. Yeah. I mean, it's people have been asking me all the clients. The number one question clients ask: can I sell stocks yet? Right? I'm like, Jesus. I mean, you could have sold stocks for the same reasons that you can sell right now for the last 2 months. It's extremely stretched in valuations, and a lot of it's priced in good news. So that's not a good enough reason. You need a price action or a catalyst, right? A catalyst to sell. Catalyst to sell. Otherwise, I think you're too early. I doubt it's just going to turn by itself and put a nice little top in, technical top, and then the market's just going to respond and pull back 1,500 points over two or 3 weeks on the back of no catalyst. I think it's better for us to wait for a catalyst. I mean, if we get some nice bearish price action, then yeah, we can talk about that as well. But that hasn't really been a reason to sell stocks in the last 5 years, pretty much. So the music is still playing. I'm a currency dealer full-time, so literally what I do here is what I do at work, and mainly a bit more one-on-one with clients with their positions, and try to help them become better traders. And so yeah, it's from fresh to pretty experienced traders. It's different jobs for different people, right? If you're a really good trader, the main thing you get is someone to talk about the market with, bounce ideas, and be a risk manager. Whereas if you're a complete newbie, then you've got to start from the start, and risk management is probably the most important thing that I teach to beginners, and that's probably best taught first before you lose a lot of money. Alright, but it's that's the main job I do. So there's a fair bit of market watching going on in that, but unfortunately I work the Asian session, so the Asian session is sort of like the lull between the European and the US session, that you don't get too much tradable price action or tradable news. Hopefully that changes when China comes online, but that could still be 5 to 10 years away before all yuan traders. And that'll be maybe Asian session will become the main session. That would be fantastic, right? It's going to become another reason to move to Southeast Asia and become a full-time trader. Alright guys, so yeah, so pretty much the stocks have continued onwards and upwards, and that's still continuing the US dollar rally. And in terms of whether you can start to fade this rally, I think this is probably the best day so far we've seen to start looking at the fading or to cut back exposure. Does that mean we get a counter sort of resumption here of the pound? Well, the pound failed at 128. Now, if you're long the pound, you should have cut. Should have cut yesterday. You know, we're talking about breaking 128 and going up to a relief rally up to 129. The stream stopped, and then in the next hour you got this, right? That's bearish as hell, right? That's super bearish, and just cut, right? Cut. You should be out by, if you're watching a lot, if you're watching the market closely, cut by 127.80. If you let it run a little bit longer, then really that last 30 pips from 127.80 to 127.50, which is the original stop we put on, unnecessary. So in that particular time, you could just cut early, but obviously it's hard in hindsight, right? And then Carney came out this morning and was pretty bearish, dovish as expected. So the speech that he was planning to give last week, he gave today, and his whole speech was around, we're not ready to cut yet. And so he's always been saying like this. So he's obviously not part of the three, the 5-3 the three that voted for a rate hike. He's not part of that. So he's part of the group which is looking for Brexit negotiation information, how that unfolds, and also he's looking for wage growth. So he doesn't so much care about the inflation they've got. He's caring about real wage growth, and he's caring about the Brexit negotiations. So that to me suggests that if Brexit negotiations go well, you've got a double reason to be buying the pound, because the Bank of England timeline will be brought forward. But yeah, we still got to see how they play out. Now, I still suspect the headlines in the initial couple of weeks from these Brexit negotiations beginning next week will be more positive than negative, and that the negative headlines will come later if they're coming. But I can't argue with this price action. It's pretty bearish at the moment. Yeah, so those who are buying on the everything will be right, mate, are not really looking at the technicals, and the technicals suggest we're heading back towards about 125 after putting in that high, that 120, that 130 test. So back towards 125 would be a much safer level to start building up longs if you're a pound recovery sort of trader. if you take the view that things will be fine. And euro really is much ado about nothing just yet. Now, the longer that the euro remains pretty well supported, perhaps the more we can start to look back towards the top side. But at the moment, I mean, I don't think there's any reason to get long again. And if you're selling, you know, I mean, you're selling on US dollar strength, not on euro weakness, right? So that's a different game. If it's all about the US dollar strength, and dollar yen's a better way of expressing that. So to me, the selling of the euro to the 110 level is a trade that I'd rather be long on the dollar yen towards the 113 level. I mean, the market makers these days are computers, right? So I don't know, the old school accumulation and then new direction sort of talk that you associate with market makers, how they're trying to trick everyone and sort of set the market up. I think the computers are doing that in a new way, right? Looking at the positioning and trying to kill as many people, but I think they're a bit more gentle than the market makers, and I'm not sure there's too much giant conspiracy master plan stuff going on here in terms of trading. You know, like I think I was reading the chat last night after I streamed, and everyone's talking about how the retail market's 90% short Kiwi, and we're also looking at statistics how, you know, the price pattern of 5 weeks in a row rally in the Kiwi is really rare to continue higher, but everyone's like, well, it's definitely going higher because we're all short and the market's going to kill the retail traders. And I thought that was sort of hilarious, right? That's the reasoning behind us, is that you know, this looks like a bearish pattern, it's just a trap, they're just trying to get us to sell into it, and the RBNZ is not going to give you that weakness that you're looking for. And you know, to me, I mean, I can understand that sentiment, and probably, you know, if we do break higher and it's on the back of the RBNZ not being as neutral as everyone set up to be, and the final little squeeze here of the Kiwi dollar, and then we're looking to sell, you know, towards 75, that would be fantastic, right? As a trader, if we got something that gentle. But I don't know. You know, at the end of the day, when the market's stretched like this and all the retail's short, I suspect we're just going to go sideways. So if we had to bet, if I could make money from betting sideways, I would bet on sideways rather than it squeezing high or going lower after this RBNZ. That way, no one wins, right? Until we pick a new direction, and then, you know, if it goes sideways, you might even get enough buyers to start buying to sort of counter trend, and then we get a flip down to downside first. So it doesn't always have to be as binary as topside, downside after a nice big rally up here. But yeah, the record short positioning from the retail traders does sort of suggest we are going higher, even if it's technically overbought right now, and statistically overbought on the weekly. It can do it. It can still go higher. Yeah, sideways for two weeks, right? To just get everyone bored, and then take everyone's money. If we're talking as a conspiracy spirit, yeah. Yeah, we can trade the iron condors. I mean, I don't want to get into options here with the room, but you can do it by selling puts and selling calls. And basically, you're going to make money from the lack of volatility in the next 2 weeks. I'll tell you the price of that. Broker I work with is actually an options broker, so we do a fair bit of options. With the RBNZ, actually, we get paid a fair bit. You get paid a fair bit for selling a straddle like that. I will look into it, and maybe we'll bring it up on the stream tomorrow. And if you're interested in it, I'll teach you how to do it. Yeah? You know, we don't have to sell the money. You can sell a little bit above and below the money. and you'll make money as long as the market ends, you know, in a pretty big range. And that's not a bad way to do it, because you can imagine if the market does get talked down, they'll buy it back up, and if it goes higher, then those maybe it's perfect time to start selling into it. But we'll look at the pricing of it, see if it's worth it, do an analysis on that. Selling options sounds safe. No one's ever lost money doing that. That's a joke, guys. Selling options is pretty much the first thing you learn not to do in option school. Alright guys, what are we going to look at here? We're going to look at a couple of reports, and first thing we're going to look at is this speech from Carney today. And the main takeaways from this speech is his comments on rates. Consumer spending is mixed. Wage growth is anemic. And domestic inflationary pressure subdued. So most of the inflation is due to a weak pound and high import costs, right? And the big takeaway is that now is not the time to begin tightening policy. Wants to see if wages firm and the economic reaction to Brexit. All right, so the market took that as dovish. Now, can that mean I mean, it's not surprised when he's dovish, right? So can the market respond and rally if the US dollar, you know, sort of sell off? Sorry, US dollar buying is reaching a little bit of a reversal point. So dollar yen down, pound up, euro up. Yeah, of course. And then really, I mean, the stops up there would be quite juicy. I mean, the stops would be juicy just to get to above the pre-Carney speech today. You know, so if it can come out, muster a little squeeze here, we'll get some nice little stops above that. I don't know. Once bitten, twice shy here on the pound. So I think I'm too optimistic about this whole Brexit exit. Need to talk to Potter and a few to see how crazy May is and how aggressive she's going to be. Still people out there think that these pounds going to 110. A lot of banks, actually. A lot of banks think we're going to 110. And that's pretty doomsday. That's euro pound to parity as well. You'll see a lot of banks talking about euro pound to parity. A little special from our local bank here in Australia, Euro Aussie. This is a nice report put out by Westpac every couple of months. So we've looked at this in the past, and what you're seeing with Euro Aussie is a nice reversal in the last 2 weeks. That had caught the market a little surprised, yeah? Because we were following that Euro Aussie trend higher last month, and it was in a nice trend. Now we've broken back below, and we're searching for support. It's pretty aggressive selling too. So we've still got a bit of room to get back to the previous range highs. So this little zone here, yeah. So we've still got another 200 points here to the downside. Now that puts Aussie at around a 77 level, and the Euro back around 110.50-ish. So that would make sense, yeah. That would make sense on the charts if this divergence can continue. But I think over time we still want to be long this pair. We probably got a little too aggressive and too excited on the rally up, but it's over time I think the China's going to have more issues, and ECB is going to get closer to the to relief rally size. So longer term projections, and that's always hard in FX. I still really want to be buying dips in Euro against most pairs. Yeah, so Euro Yen is another one which we really want to get as long as possible if we can get the opportunity. So a pullback here towards the 123 levels again would be nice, but and Euro USD towards 110. That's if you believe in the whole Euro is going to taper at some point, and Draghi's going to have to change his tune, and the market's going to respond aggressively. Alright, virtually one-way traffic on the Euro in April and May as the Euro shows political risk, and the Aussie suffered from sliding commodity prices. Iron ore is still pretty low, guys. It hasn't really recovered. AUD has recovered some lost ground lately through firmer domestic data, which has doused RBA rate cut talk, which is true. There should be enough momentum for the pair to extend to around 145, 146 in coming days, but commodity prices are likely to keep a lid on Aussie rallies with iron ore and coal shipments recovering from weather interruptions. Industrial demand looking fairly steady. ECB was careful not to encourage the hawks at the June meeting. Yeah, it's true. All this is true. Alright, but then they're looking to buy the euro for a pushback to 150 again in Q3. These guys are basically reading my mind. Basically on the same page as Sean Collos. I am liking what you're putting out there, mate. I'm liking this. RBA minutes came out today and they did say that they were starting to be concerned about our housing, so there is that. Moody's is obviously concerned when they downgraded our banks yesterday. Westpac's main view is that the cash rate remain on hold throughout 2017 and 2018. That's pretty neutral. It's pretty dovish actually compared to the market. A lot of people think that there is chance of a Q1 2018 rate hike. The most bullish of the Aussie traders think there's going to be third quarter 2017 December rate hike. And you can see that post ECB there's been a more another pullback in bond rates in the Eurozone. So Draghi's been successful in delaying. And in terms of local data in Australia, it's mostly from the employment data has been super strong, right? So it's makes us think that maybe everything's a little bit better than the doomsayers are on the case. So easy can get down here. Actually, what we're looking at here is the positioning is pretty subdued in the Aussie right now. Yeah, and I suppose no one's really talking up 80 or talking down 70 at the moment. So yeah, it's interesting. And Eurozone though is the other side. Eurozone's starting to get a little bit aggressive on the longs. Maybe we got to be a little careful of that, guys. Yeah. Got to be a little bit careful that the Euro story might be too, while compelling, might be a little early. Alright, we've got the ING report here. It's the last report for today. Alright, trading the taper. Alright, Euro USD is above its short-term interest rates. Spreads mainly attributed to speculation ECB tapering this summer. We have yet to see that though. They have a view that German yields are going to break higher in third quarter this year, and that's going to help the euro rally. And in the US, they think an ineffective Trump policy are going to be holding the dollar back later. And at the moment, the Fed, projections, those dot plots, suggest 100 basis points, 4 more rate hikes coming in the next, by end of 2018, where the market's only priced in 40. So one of those is wrong. There's a huge movement. Yeah. If the Fed's wrong, then that, we've still got to see the market price that react to that change from the Fed, and probably that would push it even lower, expectations. Italian elections in Q1 may restrain US dollar strength. Okay, I don't know. European political risk seems to have been much less as crazy as some of the other countries, right? So we've already had the Netherlands and France, and it went through without a hitch. Maybe Italy elections won't be too much more. Dollar yen. Continue to trade tightly with the US 10-year. Remember, we watch the US 10-year nearly every second day on this stream. And the US 10-year seems to be finding a base. If they do go to 2.5, then yeah, dollar yen's going to 115 plus. That's a big if though. It's really hard to trade the US 10-year and the yields. And also if the Fed starts to be come across more dovish, then I don't think the US yields are going to get anywhere too quickly. ING is looking for a sharp recovery in the pound though, to 140. And Euro Yen 130. Jesus, these guys are straight on my. That's my view. 130 on the Euro Yen is really is my year-end view. That's my trade that I've talked about a lot with you guys. So that's via Euro 115, and the dollar yen at 115 will get us to 130 here on the Euro Yen, and that's the one I'm looking for. So we look, we did a lot of Euro Yen last month. We're going to get back into it soon. It's definitely showing some nice bullish movement at the moment. And we're trying to not sell Euro Pound at the moment. Alright guys. Yeah, where's Euro Yen? Let's have a little look at that right now. That's we've got to really try to jump in. Maybe half lots we're going to get in just so we get some exposure on the next dip. Alright. This level's been pretty well etched out. I don't think we can get back to 120, 2350 or such. I think we can start to look to buy at 124. That should be fine. Alright guys, good luck with your trading, and if you want me to look at particular pairs, just send me a little PM and I'll try to focus on that in one of the streams coming up. It's no problem at all. Most crosses are fine. And other than that, just be a little bit careful here with the US dollar strength. I know it's a trend and it looks nice. Just it's probably not the easiest levels to continue buying the US dollar. And if the market's going to turn around, it's after this couple of relief rally days, because the US yields haven't gone the same direction as US dollar in the last couple of days. So there is some disconnect there, right? So better to be selling Euro Aussie, or selling Euro Kiwi, or selling Euro CAD, or selling Pound CAD, selling Pound Aussie, selling Pound Kiwi, rather than trying to get involved with the US dollar right now. Alright guys, good luck with your trades, and if you're on the ASX, just let's hold it and see if we can get a big payoff today.